Hello and welcome to this session brought to you by the Academy of Practical Accounts in conjunction with your institution. In this session, we'll look at the tax and income computations. We are basically reviewing what has been computed in form of tax and income. Now, the source of figures for computation is the profit and loss account. Basically that. Now, let's have a quick look at the profit and loss account. Actually, via this dashboard, we look at the three-line profit and loss account. So we are saying the profit is 14,403. And then below here is the tax and income update. Now, this is a summarized display of tax and income updates, whereas there are detailed computations. However, let's go back quickly. Now, how do we get to the detailed computations? We are in miscellaneous here. We should go to the mini year-end reports checklist, and then the detailed computations is report A2. Click that to get to these detailed computations. Now, this is supposed to be part of the tax return, the short tax return, which is SA103S. In the UK, probably the identity is different in different countries. Now, before we go into this is a detailed report that has computations. Now, these computations has got additional boxes. You find box A that is actually not on the tax return. Now, what we're going to do, let's have a quick look at the tax return itself. Well, what we have here is the SA103, which is the short tax return for the self-employed. Now remember, this course is based on self-employment, and that in particular refers to the sole trader. And the difference between this self-employed and the sole trader we look at for accounts trainees is that this is the short version. Accounts trainees are prepared to handle and manage the full version of the tax return. So in the UK, this is what should be prepared. So above here is the name, unique taxpayer reference. You got business details up to box number 9. So this is personal information up to box number 9. And what we generate in the software caters for box number 9 up to box number 38. Box number 9 up to box number 38. So this is the turnover, which is the other business income, and actually the boxes are numbered accordingly. Now for the small business, there is a provision. There is a provision. If your turnover was below 82, you may just put your total expenses in box 20 rather than filling in the whole section. So in this case, we can ignore all those boxes and just enter the total there. And that is what makes it possible to simplify the accounting process. In that, all you need to know is that this is an income and that's an expense, period. The rest you're not bothered. Okay, and then of course we got a net profit here or net loss, and then we got the annual investment allowance, other capital allowances. We're not going to go into that really, that's a little bit complicated. And then of course calculating your taxable profits. So you can see the box numbers, and that is what we have on report A1. A1 is designed to match exactly to this. So when you're filling in your tax return, you simply copy figures from box A1. Now let's get here. Sorry, not box A1, but report A1. Now this is the detailed computations. These are the detailed computations, which, okay, they are tax computations and income. These are detailed computations which cater for adjustments. Now, those adjustments are not required on the tax return, but we try to provide some kind of explanation and illustration in our computations. So this is the A2. We're going to end up with A2, but then let me find something. Where is this one? This one, yes, this one is supposed to guide me in the process, okay? All right, now let's first go back to report A1 and try to match it to this one. So we were on report A2, which are the tax computations, and this is A1. This is A1. So as you can see, we've got boxes running from 9 up to 38, and there's nothing beyond that. So they are supposed to match that 9 all the way up to box 38. And as you can see below here, let me drag this down here. This is the SA103S, the short one. Okay, so that is what we are generating the report for. That is the report A1. Now let's go back to our report A1. Now apparently A1 is a summarized report in that the detailed computations are found on report A2. So we're going to report A2 to try to make sense of what exactly is done. So we go to A2 and try to understand what is done where. Remember, we have verified where these figures come from. Manually, it's a different case, but this one matches. Let's go to this Excel here. So that 33382 matches the figure we have on A1, A2, it's on B1, it's on B4, it's on C3, and further still, it's on report F2. It's on report F2. That is comprehensive accounting reporting. Okay, we have looked at all those reports. All right, now let's see. We need to get less stuff on our screen. Okay, so we've got a figure for box 9. Now this figure 11, we can put it in, we can ignore it, but it ends up in box 20, where the authorities say you can ignore all the other boxes, but record your expenses, total expenses in box 20. And then we compute the difference between 33 and that one to get a profit of 14,403, as is showed on the profit and loss account. Now let's scroll down. Now all these are blank. Annual investment allowance. It's an allowance utilized by some businesses. Those that buy fixed assets. There are some regulations regarding the annual investment allowance. It used to be 500,000, was dropped to 100,000. Currently, it's about 50,000. So when you buy fixed assets of up to 50,000, you can write them off in the year of purchase in form of annual investment allowances. But of course, there are guidelines regarding this. What does it say here? 100% first year allowance, balancing allowances. Okay. Now we have other allowances here. Now, and then we have writing down allowances. This is when fixed assets are depreciated using tax allowances. And then we have the balancing charge here. Now this balancing charge is where a profit is made on the disposal of a fixed asset. And then of course personal goods should come here, and net profit before adjustment is generated. We can ignore the rest. So that one is equal to that because there are zeros there. Now we come to annual investment allowance. Now these ones are to reverse because this one is already adjusted. But for illustration purposes, we have to reverse the adjustment that was done in there, and then we show how it's done, how the training, how it should be done in the training perspective and practical perspective if it's not automated. Now, well, that is the net profit before adjustment. Okay, if it's a net loss, it should be in the box below there. Now we're supposed to deduct tax allowances. We've got annual investment allowance, other allowances, and written down allowances. They should be deducted before we get to net profit after allowances. And what should be added back? This is a balancing charge, the profit made on the disposal of a fixed asset. And then below that, these are personal goods. Now let's see personal goods and services. Now in this case, it's an efficient system whereby we don't have personal goods and services included. They are not recorded on the profit and loss account, and that is why this one is blank. Now if there's a loss brought forward, it should be typed into here. The system can't generate that. And then in box C, we have the taxable profit after loss brought forward. So what happens is the difference between this report A2 and report A1 is that we've got the A, B, C, D, E, which are inserted for illustration and computation purposes, up to report S. Those are inserted for illustration purposes. Otherwise, we would on the ones that end up on box A1 is box 9 up to 38. Now let's see, we've got 38 here. Okay, let's continue with our computations. Now this one would be income not in box 9 and 10. It should be typed in. Now personal allowance. Now by default, your software should come with a personal allowance of 11,000. Now what we're going to do is to add that. Now it's been zeroed down because some countries don't have personal allowances. So in case there's no personal allowance, it should be 0. Now let's put the 11,000 in the case of UK. So we are saying that in case of a personal allowance of 11,000 as of 2016, then the profit to tax is only 3403. So that means that 11,000 is supposed to be tax-free. 11,000 is supposed to be tax-free. These are the boxes, a little bit complicated. We shall ignore them. So. Now we get down here to the class 2 NIC, National Insurance Contributions. This is supposed to be a certain percentage. No, it's supposed to be £2.80 per week. So if we put 1 week there, it's computed for 1 week, 280. So if you put 52 weeks, that is the value, which we've got 52 weeks in a year. So let's leave it at a 0. We don't want that to be computed. And then class 4 NIC is 9%. Now this 9% is good. 9%, there's no explanation there. We shall have to check on that. That 9% is supposed to be computed on profits above 43,000. 43,000. Let me see. It's about, yeah, supposed to be 43,000. Okay. Now we come to class 4 NIC. Now class 4 NIC is not computed simply because we are catering for students in other parts of the world who don't have the class 4 NIC. So for learning purposes, we decided to leave it out. Now when you tick that box, it's not computed. And if it's computed based on this business, the amount would be 570. We shall not go into that. So we want to prevent the computation by ticking that box, and the class 4 NIC disappears. Now what is below here? We've got box K for tax on profit below 32,000. So profits up to 32,000 should be taxed at 20%. Anything above 32,000 is taxed at 40%. I don't know what the limitations or thresholds are in your country, but in UK, up to 32,000, it's 20%. If we don't want that to be computed, we simply remove that one. Now let's see. Now what we're going to do is to assume there is no personal allowance. So we change that to a 0, such that we have a tax computed on all the 14,000. So the annual tax would be 2880.7. That's 20% of the profit of 14,403. So there are no CIS deductions. And whatever is left, in the case of a sole trader's business, turns out to be income to the business owner, and they are free to take it out from the business. Now, what happens is most self-employed people have got to take out money on a weekly basis, probably annual basis, monthly basis. So we have got estimated computations here, and we are saying that basing on a profit of 14,400 and a tax of 2880, the annual income should be 11,522. Now we divide that by 12, gives us 960 pounds. So on a monthly basis, it's 960 pounds. And we estimate that that month has got 4 weeks. You should be taking out 240 per week. However, I think we should be changing this formula and instead divide the annual figure by 52 weeks. But then this figure changes with changes in income, expenses, and the month in question. The month in question. When there is no profit, none of these will be computed. There's no income. Month one, if you start with very big expenses and there's no profit in month one, there's no income to be taken out. So it's up to the self-employed person to make a prudent decision. How much do I take out at this moment now that there is no profit as yet? So ideally we should change this, divide it by 52, but then that should depend on the positioning of that week in the financial year. So it's going to be adjusted programmatically. So that is quick overview of the computations. You basically get that multiplied by 20% to get that. And to get the income, it's 14 minus the tax, and we're left with the annual income. Annual income divided by 12, we get that. This one divided by 4, we get that. And that's it. Now, probably what we need to do is to record the income. Sorry, to record the tax computed. We've got 1 minute or so. No, we're going to record it in the next one. Yeah, we shall record this tax computation in the next session. So in case of any questions, please you send us an email, find us on Skype, and our WhatsApp contacts are also to be communicated to you at some point. Thank you for listening.